Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I offer in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Good day, all. Ira Epstein of Linn & Associates with your metals market update for this Thursday, the 3rd of January, 2019. And we're getting here pushing towards the 2:20 time zone now. So let's talk about what's going on. For those of you that caught my videos yesterday, I said after I recorded them, I recorded them later yesterday, not at this time. I said, watch out, Apple came out with some bad guidance. Down 600 points even at this hour in the stock market, 56 lower in the S&P, breaking the indices in large part because of that. Now we saw today that Nancy Pelosi is now Speaker of the House again, the second time. And she set history being the first woman speaker, so give her credit for that. But now the war starts. The word impeachment's already come out. They're going to send a bill that's dead before it arrives tomorrow. So there's going to be market frustration. We have our delegation from the U.S., as you know already, on its way to China. I think that's this weekend. We'll see if something good comes with that. But the metal markets, that's what we're talking about. In China, you've got a lot of pressure on this market. If you're watching their PMIs, they're in the first stages of a recession. If you looked at our data today that came out, and if you get my twice daily update, it couldn't have been worse. I mean, our economic data is sinking away. And the funny part is people that went and talking about 3.25%, 3.5%, 3.75%, 10-year note yields were down to 2.64, and now they're talking maybe no rate hikes this year. It's too soon to say no rate hikes. Let's see how things develop. Markets get ahead of themselves. But not for the metals. What the metals have done is they've put in a heck of a rally as people are running to the metals. The Japanese yen, you're going to read tonight the flash crash. The crash was against a number of currencies against the yen. They're called currency pairs, and they exploded as the yen took off, as traders decided they wanted to own them. And remember, you have an inversion market in bonds and notes. As they go higher, real rates fall, and that's what's been going on. When you look at the gold, look at how it's come up here. The market has stayed with a bullish bias. I define the bias as when a market is over the 18-week or the 18-day moving average of closes. That would be an upside bias, either one, downside bias under that number. So I see an upside bias. When we look at this chart, pretty hard to argue how it's not come straight up here. Very difficult if you've been looking for a big break to buy. It hasn't offered it to you. But think of the stock market break. You know, there's an inversion correlation going on here. The deeper the stock market's going, the higher the gold right now is going. When the stock market corrects, don't be surprised that you get a pullback in this market. But you've got the higher lows, higher highs as measured by the swing line. That's bullish unless you take out 1269.10, and that would end this run of that leg. What about the 18-day average of closes? Well, number one, it's a laggard indicator. It's not forward projecting. It follows what's going on. It's up to 1263.60 right now. It's adding about $3 a day. So I would expect it not to get over 1269.10 when it reopens tonight. So if the market broke, yes, it could offer support, but you'd still break the bullish pattern to get to it. Not the best thing. When we take a look at what the market's doing, this is called running the Bollinger Band. Now, there's an importance to this. A Bollinger Band has different patterns within it to begin with. They can be going sideways, or a market can take off and latch onto the band, or it can just get up to the band and back off and often pull back to that 18-day average of closes. It went down to it, back to it. I can go on and on with these for you. This is called running the band. It often is accompanied by the momentum of the market locking in or embedding. That's the word that I use. And when a slow stochastic, which is made up of two moving averages flipping over each other, locks in over 80, until it loses that, it's said to be bullish. Add to that that the market keeps hitting and just leaning right on that top band, and you have a very bullish situation until it runs out. Trying to predict where it runs out? Well, we have other tools that can do that, or help with it at least, and they're called price counts and the like. In this chart, which is GLD, the popular ETF, it's very similar, as you can see, to how the futures are going. First off, the market has stayed over the 18-day moving average of closes. When it hit the upper Bollinger Band, it did back away, and once it embedded right here, it's just leaning on it and running to the upside. That's why I always laugh when traders, some will say, well, I'm going short against that Bollinger Band. I go, why? That's not how it was created. It's not what it's supposed to do. Here is a different situation. This is a market that when it's been hitting the upper band, it's backing off. What's different about the chart? You don't have an embedded reading. You have a market that's just now in overbought territory, ran back to the upper Bollinger Band, and I think the pros are waiting for the market taking money off the table. Again, it's not a short sale that I see here. In fact, while we can see that the market's been working higher, your trend was all the way back here. It ended on this big down day, and since then you've been making higher highs, lower lows, just back and forth in the market. If you'll recall, I said one of the things that gold needs to get a lasting run is to get the base metals, get the spread of gold, silver to change. I don't consider silver, like many of you do, a precious metal. You know, I think there's a lot more precious in terms of price in palladium, platinum when you're talking $1,000 an ounce than $15 an ounce here. But when we look at the market in silver, you have that pattern where you're running against things. The upper Bollinger Band, you're trading against it. You might even be over it again today. Won't know till the close, but it's very close. It might be 6 days in a row. It's power. Normally it's 5 that the market has trouble with. But you've got that embedded reading, and until you lose that, it's all systems still go. And the market that broke out to the downside, and we call it Dr. Copper, you're going to look back at this, and this is a top area. I'm not saying it can't be taken out in time. I'm saying you got to do a lot of work to get through it. This is an ugly looking chart. It's telling you the story of the world's largest copper consumer, which is China, having an issue as these markets come down. And now look at U.S. manufacturing, look at what's happening at home even in our country, and things are starting to get worse and worse numbers at this point. There's an important piece of tomorrow, our employment data. We'll see how that's even going to look. When you come to the platinum market, you're stuck. Look at how often you're hitting the 18-day average of close. Do you see that? Now squint a little with me and notice the upper Bollinger Band and the bottom. They're going sideways. It's no longer the trend the market had. Now the market is trying to figure out what next. The odds would favor if the gold stays up, the other metals like this could come alive. In the palladium market, I watched what this is doing. This market has been very successful in working itself, just gradually working higher, never getting excessive, hitting all-time highs in the process, but not getting crazy, always pulling back and hanging in at this 18-day average of closes. In the dollar index, we saw a market yesterday that had a huge reversal to the upside, closed up and over the 18-day average, and today it's given back about 60 of those points, but hasn't taken out this low yet. This is still a market that I think is churning sideways, trying to figure what is the next trend in the dollar going to be, and there's big arguments about that in many, many places. As you can see, as I'm finishing up here, and I'll get to the financial update in the next hour or so, wow, not even giving the market a respite going into the close. In my futures kit, I teach a lot of what we're talking about here, and I carry you to different levels with it. It is free. It teaches you from beginning concepts to chart patterns, how to work with some of these different parts. It does not, and it's intended to not replace my charting course, which is a pay-for vehicle. This one is free, and it really gives a lot of information. If I were you, take a look at it. Give us a call. You can go to our website to sign up for it. You can click right up here if you're watching me on YouTube, and it'll take you to the front page. Sign up for the kit. It's free, and we'll put it in your email box. You have a good day. I'm Ira Epstein.